WealthSouth has been a great corporate partner to us and is very involved in many community efforts. We're also pleased that they have stepped into the presenting spot. Last year, I think, was their first year, and Jeff, we really appreciate and appreciate all that your team does to help advance the community. Now I'd like to have Jeff Zinger, Senior Vice President for WealthSouth, to the podium to present comments on behalf of our presenting sponsor. Thank you, sir.
Good afternoon, and welcome to Commerce Lexington's first public policy luncheon of 2025 presented by WealthSouth. As Bob said, my name is Jeff Zinger, and I'm a Senior Vice President with WealthSouth. WealthSouth is a division of Farmers National Bank of Danville, and we're a full-service financial company located in downtown Lexington. We offer wealth management, trust, institutional, private banking services, as well as commercial banking, and we have a dedicated equine lending department as well. As you're aware, the Public Policy Luncheon has a rich history of bringing state and national leaders to discuss critical issues that impact our local community. It is our drive to serve and support Lexington that makes us proud to bring these important topics to our local community by presenting Commerce Lexington's Public Policy Luncheon. I want to thank Congressman Barr for taking time out of his busy schedule to join us today and share his insights about the current events in Washington and how they impact our Commonwealth. Thank you.
Thank you, Jeff. Thank you very much, Jeff. Andy Barr has been the United States Representative for Kentucky's 6th Congressional District since 2013. When I looked at the agenda and the bio that we had set up yesterday, it was very lengthy. Man, you know, we all know Congressman Barr. Many of us know him personally, grew up with him here in Lexington, participated in many different events and activities. And then I started reading down the bio. And I'm like, okay, we got to mention that. We got to mention that. But one of the things that I want to point out is that the committees and the subcommittees that he sits on, he also, in most of those, has a chair role. He's the leader of those committees. And as I mention them and just say a word about them, you're going to understand the significance of what Congressman Barr means to this district, but to our country. Congressman Barr serves on what I would call some of the most influential committees in the United States House of Representatives. He's including the senior member of the House Financial Services Committee. He also chairs the Prominent Financial Institutions and Monetary Policy Subcommittee. This subcommittee has oversight of key financial regulators and jurisdiction over the monetary policy functions of the Federal Open Market Committee of the Federal Reserve. I work a lot of Saturdays, like all of our staff we do, and when I have the TV on CNBC, when they're covering the week prior, it's not uncommon that you'll see Congressman Barr on CNBC, Fox Business News, you name it, he's there. And you just don't get invited to those shows because you're going to take up space. You're there because you're seen as very incredibly important and very involved. Congressman Barr is in his second term on the House Foreign Affairs Committee, where he serves on the Indo-Pacific Subcommittee. In addition, Congressman Barr was appointed to serve on the House Select Committee. No small feat. The House Select Committee on the strategic competition between the United States and Chinese Communist Party, CCP, in the 118th Congress. Finance, national security. To me, that's pretty significant and has a big impact on us here regionally as well as across the United States. Now more on the personal side. Congressman Barr graduated from Lexington's Henry Clay High School in 1992, earned his Bachelor of Arts degree in Government and Philosophy. He's Phi Beta Kappa from the University of Virginia in 1996 and received his law degree from the University of Kentucky in 2001. Congressman Barr and his wife Davis reside in Lexington, Kentucky with their son Hale and his two daughters, Eleanor and Mary Clay. Please help me in welcoming the 6th Congressional District Congressman, Andy Barr.
Good afternoon. Thank you, Bob and Commerce Lexington, WealthSouth, for sponsoring today's lunch. It's great to be with all of you all. And whenever I'm speaking in front of a Chamber of Commerce or a business group, I remember the words of our 30th president, Calvin Coolidge, one of my favorites, who said, "The business of the American people is business." And this is a group that I think would appreciate that. So many entrepreneurs and business owners who have risked, have taken their own capital, have gone to a lender, have put everything on the line, worked hours, and hired people and signed both sides of the paycheck, put up with burdensome government regulations or increasing prices through inflation or the uncertainty of tariff policies, and you deal with all of that with a smile on your face because the customer's always right. And so for you all to take time out of your schedule and come forfeit your lunchtime when you could be operating your enterprise or working with your employees or serving your customers, I get it, it's a big deal, and so I appreciate the time that you've committed here today, and hopefully I have an opportunity to give you a little update from Washington, D.C., and maybe you can gain a little insight and also offer me the feedback that I need to best represent Commerce Lexington and the business community here in Central Kentucky. You are a key part of the story of the American dream, and I believe in the American dream. That's why I was called to public service. That's why I continue to look at future opportunities to serve the Commonwealth of Kentucky, not just within here in Central Kentucky, because I believe that the greatness of our country is rooted in this idea of the American dream, the idea of upward mobility, that regardless of your station in life, that if you work hard, you play by the rules, you take a risk, that with free enterprise, you can succeed and you can create prosperity for yourself, for your family, for your community. I believe in that. And one of my ideological heroes is a guy named Jack Kemp, the late Jack Kemp. He was a football player. He became a congressman, a tax-cutting congressman, and he ultimately became the Secretary of Housing and Urban Development. He believed in this idea of upward mobility and escaping poverty through freedom and free enterprise. He ultimately became the nominee for Vice President of the United States. But here's what Jack Kemp said, and that I love and I think is inspiration to all of us. He said, "There is no limit to what free men and free women can achieve in a free market with free enterprise as long as people are free to follow their dreams." That is the essence of America. That is what I love about this country. And I believe in that, the wealth-creating power of free enterprise. So let me talk about 4 topics of the day that I think connect into our call, all of us in this room, me as your representative, to restore the American dream, to re-energize the American dream, to give Americans hope. Because if there's one thing we learned from the last election and the exit polls and what the sentiment of the American people was, is that they thought that the country was on the wrong track. And regardless of their political stripe, what you saw in the data, whether they were Democrats, Independents, or Republicans, is that many Americans feel like that American dream is slipping away. So we all, regardless of our political flavor, that's a common uniting idea for our country, is how do we restore that sense of upward mobility, that opportunity society that we all want? The 4 topics that I think tie into that are, number 1, debt, and let me talk about this DOGE idea that's in Washington right now. Secondly, the coming reconciliation bill and the tax cuts and the renewal of the tax cuts. Third, this tariff and trade policy that is a hot topic around the country. And finally, deregulation that ties in to my work as chairman of the Financial Institutions Subcommittee. So how do we restore that engine of economic growth in this country? Number 1, we cannot discount the impact that the national debt has as a drag on economic growth and opportunity in the American dream. So right now we face a $36 trillion national debt. That debt exceeds the size of the entire U.S. economy, the largest in the world. and it surpassed the historic peak of World War II when debt to GDP was about 106%. Today, it is an astonishing 122%. The only reason why we are saved with that level of debt is because we still maintain the world's reserve currency, and there is still demand for U.S. Treasuries. That is not a guarantee in the future. We are seeing weakness in the bond market, the Treasury markets, where we've had weak auctions, weak demand for auctions. That's an alarm bell where investors, both domestic and foreign investors in U.S. Treasuries, are demanding higher yields. It doesn't matter when the Federal Reserve cuts the short-term Fed funds rate. If the long end of the yield curve is high because people are requiring to be paid more for investing in U.S. Treasuries, that means that your 30-year fixed-rate mortgage for the realtors in the room and the home builders is pushing upward. It means that your auto loan, your credit card interest rate, your small business loan, all of that is more expensive, and that is impounded into inflation and the cost of living crisis. So getting our fiscal house in order is important to put downward pressure on the 10-year, especially the 10-year Treasury, so that we can see that dream of home ownership and that 30-year fixed-rate mortgage start to come down. Why is this at a crisis point or a precipice? We've been talking about debt and deficits for a long time, certainly in my time in Congress and before, but we really have reached that proverbial tipping point. Why do I say that? Well, the current national debt is equivalent to $106,000 per person. We have added in just the last 4 years $8.5 trillion to the debt. That's the most we've added to the debt in just one 4-year period. The previous 4 was not quite that large, but was still large because of the pandemic. And if you stacked $1 bills on top of one another to reach that $36 trillion, what does that mean? Nobody can quite understand what that means. $1 bills on top of one another, the pile would reach the moon and back 5.15 times. So this is an astronomical figure. The debt service that we pay right now exceeds our entire national defense budget. So this is truly an economic and national security crisis. I don't anticipate the Fed cutting interest rates anytime soon because inflation is still above the 2% target, and so that continues to put pressure. One final point about the magnitude, the scale of this crisis facing us. I was with the CIO of BlackRock, who manages $3 trillion in the U.S. Treasury market, and he told me just last month, he said, consider this, the United States today, in February of 2025, is issuing approximately $573 billion in treasuries every single week. Now, some of that is maturing debt, and that's actually bad because it's maturing from low interest rates to higher interest rates, so that adds to the compounding problem. But a lot of it is new issuance. $573 billion a week. What does that mean? That's the equivalent of the national debt of Australia. We are issuing Australia every single week in America. So, for those of you, and we all want investments in whatever it is, we have to realize that we no longer can afford a lot of this. We just can't do it. And this is why the American taxpayer demands government efficiency. According to the GAO, we are, on a yearly basis in America, the federal government is making about $521 billion in improper payments. You've heard Elon Musk with his new project, the Department of Government Efficiency, talk about individuals on the Social Security rolls who are over the age of 115. Why 115? Elon told us because the oldest U.S. person is 114. And you heard the president have a little fun with this, 160-year-old, 250-year-old people with Social Security checks. But really where you see the important work of DOGE play out, it's not necessarily that individuals who are 160 years old, obviously deceased, are actually receiving Social Security checks in the mail. The power of DOGE is that they're going in with IT professionals, government employees, vetted with statutory or executive authority. By the way, DOGE is an existing government agency set up in the Obama administration called the U.S. Digital Service, renamed by this president as the Department of Government Efficiency. This is not a new agency. It's just working now. And what they do is they're going in and they're cross-referencing the Social Security database with, let's say, other agencies' databases like the Small Business Administration, and in 1 week's time, by cross-referencing those Social Security numbers of individuals over the age of 115 and comparing them to outstanding Small Business Administration loans, they uncovered $330 million of small business loans to businesses associated with Social Security numbers of individuals over the age of 115. Surprise, surprise, none of the loans have been repaid. This exercise, which has already yielded $105 billion in savings, is not only needed, but is honoring hardworking taxpayers who expect when they pay their tax bill every year, and we're approaching April 15th, that they work hard for that income. They want their government to be effective and efficient, and so we can start living within our means. Now, is DOGE going to solve all of our problems? No, we have to have fiscal discipline and economic growth as well. But just to give you an example of how important this is, you know, you saw all of these wasteful grants from USAID, but there's a lot of misinformation about that. You know, $122 million to organizations affiliated with designated terrorist groups, or a $5 million grant to fight a law in Uganda that pushed Uganda into the arms of a oil pipeline project that was part of the Belt and Road Initiative with the Chinese Communist Party, undermining our national security, or, you know, several $1 million to Indonesian coffee companies to teach them how to be more gender and climate neutral. This is not what the American taxpayers bargained for when they wanted to support foreign assistance. The authority that Musk has is the same as any other advisor to a president. We've had kitchen cabinets and advisors to presidents who are unelected since the days of Andrew Jackson. And if you consider the fact that DOGE is overseeing hundreds and thousands of unelected officials in the executive branch, it's very rich to criticize the fact that he's unelected. The reality is, think of DOGE as kind of like a McKinsey. It's a management consulting firm that offers recommendations. And in the case of USAID, as an example, DOGE went in, audited it, found all of these grants that the American taxpayer would be offended with, were not specifically authorized by Congress, and made recommendations to a politically accountable Senate-confirmed Secretary of State, Marco Rubio. The statute that actually authorizes and codifies USAID from 1998 gives the Secretary of State the statutory authority to organize and reorganize USAID and to provide the foreign policy guidance to the administrator of USAID. So Marco Rubio takes the recommendations, implements those recommendations under the authority given to him by Congress. There is nothing unconstitutional about this, and in fact, it's being done quite well. Marco Rubio, as he suspends some of these wasteful, fraudulent grants, he, in addition, issues a waiver for emergency food assistance, for PEPFAR, for USAID assistance that is working and is in the national interest. So we know, and I am aware, because I've talked to many of you all, concern about potential grants or funding streams that might be at risk as a result of this. Come to our office. We will weigh in on your behalf. The whole exercise of DOGE is not to end a lot of these worthwhile funding streams. It is to segregate the waste, fraud, and abuse, corruption, mismanagement from that which the taxpayers actually want and deserve. So please keep us in mind and let us know if we can weigh in on that front. So we're heading into a reconciliation process, which is equally important to getting our fiscal house in order. The budget resolution that we passed does set up a process that will reduce the deficit. It does include in that estimate a growth component to that. But if we don't extend the Tax Cuts and Jobs Act, you're looking at the largest tax increase in American history. For the business community, we recognize, and we've heard from you, we are hearing it, how critically important it is that we extend some of these expiring tax provisions, especially bonus depreciation, The thoroughbred industry has really chimed in, and Keeneland has chimed in on how critically important that is for yearling sales. The manufacturers for CapEx and continuing to invest, how important that is. The small businesses, all the pass-through entities in this room, how important it is to continue that 20% deduction for the small businesses. R&D, expensing, those provisions are at risk, as is the standard deduction for a lot of families. So we now have a challenge because we want to extend all of those tax cuts, provide certainty and stability so that that business investment can continue to drive that American dream story, while at the same time we have certain folks in certain states, high tax states, that want us to increase the SALT deduction. So the pressures on getting this right are challenging, and so in order to reduce the deficit, there's going to have to be some offsets. And we know that in Energy and Commerce Committee, my colleague Brett Guthrie, who's the chairman of that committee, is going to be looking at $880 billion in programs under his jurisdiction. The Education and Workforce Committee will have about $350 billion in savings to come up with. My committee will have several $billion to come up with in financial services, and we've got ideas to do that. But at the end of the day, in order to give this economy the certainty that it needs, we need to make permanent and extend those tax cuts, and we also need to start living within our means. Let me move on to the tariff conversation really quickly, because there's no doubt that there is, in Kentucky and beyond, questions about what the policy is. And I think there's kind of two tracks here of what animates the Trump administration's tariff policy. In anticipation of the new administration, I have developed a relationship with Howard Lutnick. Howard, I knew from the private sector when he was the CEO of Cantor Fitzgerald, an amazing deal maker in the private sector and in finance, a man who's overcome a lot of tragedy. He lost 80+% of his workforce on 9/11 at Cantor Fitzgerald, that lost all of their people up at the top floor of the World Trade Center. The only reason why he wasn't there was he was taking his son to kindergarten that fateful day. But he rebuilt it. He paid all of the widows and widowers of all of his team, and he was extraordinarily generous to the 9/11 community, and has built a reputation as a master negotiator. And President Trump has tapped him to be the negotiator on trade policy. And if you listen to Howard and what he says and the philosophy of this administration, it's twofold. One, what are the objectives of these tariffs? One is national security. And that can come in different forms. It can come in the form of supply chain resiliency, whether it's steel and aluminum, for our defense industrial base, and making sure we control our own destiny with respect to that defense industrial base. It could be with respect to critical pharmaceuticals or the ingredients and the precursors to those pharmaceuticals. Or it could come in the form of semiconductors or critical technologies that drive the technologies of the future, like artificial intelligence. It could also come in the form of using tariffs to extract cooperation from our allies and our neighbors like Canada and Mexico to make sure they can help us secure our border and stop the flow of fentanyl pouring into our communities. That's the national security mission. There's another mission, and that is the one that I think is more misunderstood, and that is the economic purposefulness of the policy. I am at core a free trader. I believe in specialization. I believe in free markets. I believe in cross-border capital flows and unimpeded trade, but only when it's reciprocal and fair. And what we have seen for so many years, as President Trump correctly points out, is that even our allies and partners, not just our adversaries like the People's Republic of China, but allies and partners like India and Canada and the EU and Mexico have unfair trade practices that actually preclude market access for American exporters. And so when the new administration came in, their goal was very clear on the economic side: reciprocity, fairness. And as an example, we know that retaliatory tariffs have been threatened once again against our signature bourbon industry. We're watching the EU situation unfold. But we recognize that this policy can have enormous opportunities for the bourbon industry. And there is a new distillery in Garrett County, the Garrett County Distilling Company, owned by a first-generation American dream story entrepreneur, Shashi Reddy, who is an Indian American, first generation, came to this country with $700. He opened up India to Budweiser. He brought Budweiser to India several decades ago, and now he's trying to take Kentucky bourbon to India. Here's what he told me. He said, the sweet corn-based Kentucky whiskey goes perfectly with the spicy Indian palate. But the problem is this, that India imposes 150% tariffs. 150% tariffs on Kentucky bourbon. And so all you can find in India, a market of 1.4 billion people, is blended legacy imperial scotch. And it can't compete with our Kentucky bourbon. And so we went and talked to Howard Lutnick about that. Thank you, thank you. That means a lot to me as the co-chair of the Congressional Bourbon Caucus. And a very bipartisan caucus, I might add. Morgan McGarvey, my Democrat colleague from Louisville, and I work together on all these trade issues and tax issues for bourbon. But we went to work. We went to see the ambassador from India, had a great dinner with him at the embassy. And then we talked to Howard Lutnick and explained our concern about the coming retaliation from the EU and Canada. And he said, well, let's think about the globe. Let's not just focus on EU. Let's not just focus on Canada. Let's focus on the biggest market available to bourbon, and that's India. 2 weeks later, Modi announced 50% reduction in Kentucky bourbon, and they still have the same tariffs on scotch. And so we now have, because of this policy, we have greater market access into India. Now, we're watching the EU very closely, and the president is as well, and the administration knows this is disruptive for bourbon, and so they countered over the weekend on the threats from EU 50% tariffs on Kentucky bourbon. Thank you to the administration for doing that. And in response, the French Prime Minister said this may have been a mistake to threaten Kentucky bourbon. It's already putting major pressure on them to get back to that 0 for 0, which is the right policy, reciprocal trade. And when I was in Brussels in October and meeting with my EU counterparts, I reminded them that retaliation is a really bad idea with bourbon because many European companies, including Pernod in France and Campari in Italy, they own Kentucky bourbon. Campari owns Wild Turkey right over in Anderson County. So I said, look, if you do this, you're putting a tariff on yourself. We're going to continue to pound that message, and we're going to continue to promote fairness for all American exports to open up markets. Short-term disruption, of course, and you see a sell-off in the equity markets in the short term. But in the long run, it is the objective of this administration and your congressman to open up markets so that we have much greater demand globally for Kentucky straight bourbon whiskey. Let me just finish with a couple of other points, and that is number one on the deregulation side of things. Look, in order to unleash free enterprise, in order to unleash a renewal of the American dream, in addition to locking in the tax cuts, getting through the tariff fight on the other side with better trade deals and better market access, and reducing our spending so that we send virtuous signals to the bond market and lower interest costs for Americans. The other thing we've got to do is we've got to unleash our capital markets. And as the chairman of the Financial Institutions Subcommittee, let me tell you where all the entrepreneurship happens in America today. It happens with community financial institutions. And we have a one-size-fits-all regulatory apparatus in Washington, D.C. You may not have heard about this over the last several years, but I think of all of the accomplishments in my time as your congressman over the last several years, what I can say is probably my proudest moment is something you've never even heard of, and that's called the Basel III Endgame. It sounds like your teenager's video game. But actually what this was a regulatory proposal from the previous administration that would have impacted $17 trillion of bank assets in the United States. It would have gold-plated regulations on American institutions, financial institutions, that would make our banks much less competitive. It was a solution in search of a problem because our banks, even as former Treasury Secretary Yellen admitted, and Chairman Powell of the Federal Reserve admitted, our banks are already well capitalized. It would have de facto repealed regulatory tailoring, so our regional banks that serve our area, like PNC and Fifth Third Bank, they would have had to deal with the same kinds of regulations that our large global Wall Street banks were dealing with. We want regulatory tailoring not just for economic dynamism and economic growth, but we want it because we want to protect and preserve the diversity of the American banking system. This is what sets us apart from the rest of the world. If you go to Europe, if you go to Asia, all you'll see is big global banks. You don't see the corner community bank. You don't see the regional bank that serves the mid-market. You don't see that diversity. And I argue to my friends on the other side of the aisle, especially Elizabeth Warren, who I debated last week in Washington, or Maxine Waters, the ranking member of my committee, why are you supporting this? If you don't like big banks, you should want a flourishing community banking and regional banking sector that provides a counterweight to the large big banks. If you want financial stability, we should diffuse risk throughout the system, not concentrate risk in just a few handful of Wall Street banks. So we want regulatory tailoring. We're working on that. We want to dismantle this Orwellian Consumer Financial Protection Bureau, which is impeding Americans' access to a competitive consumer credit market. And we've got a lot of reform ideas. Reconciliation will deal with that. We want to starve that agency so that we can get back to true consumer protection, which is competition and choice. Competition and choice is the best consumer protection, not some central planning in Washington, D.C., where literally bureaucrats are picking winners and losers and banning financial services and products that are in demand from Americans. And, you know, just look at this overdraft fee proposal. This proposal would actually drive many Americans out of the regulated banking sector into much less regulated and much more usurious products. You cannot regulate demand for credit out of our system. What we need is robust competition choice. And one of my targets in our deregulation initiative is this crazy 1071 small business data collection rule. So if you're a small business and you want to go to your community bank or your regional bank and you want to get a small business loan under this proposed regulation, before you can even get to the underwriting, you're going to be required, beyond the statute, you're going to be required to provide 81 data fields of who you are and what your demographics are and what your sexual preferences and what your race and national origin are. I thought we got away from that. I thought we got away from that in America, where it was the content of your character and the creditworthiness that mattered. And we've gone away from that with this crazy regulation. And so we're going after this regulation. We want to get rid of this regulation so that folks can go to their lender and apply for a loan based on their creditworthiness, their character, the basis of their business plan, and not anything that is immaterial to them getting a business loan. I guess one final thing I'll just say: there's a lot of efforts that we're deregulatory initiatives that we're going through. But I'll conclude with this: why is deregulation of the financial services sector so important to restoring the American dream? Because when you create more competition in the marketplace, what you do is you lower the cost of business. When you make it easier to originate a loan with less cost, it means the cost of credit comes down. It means the cost of doing business comes down. When more entrepreneurs and when more small businesses can access credit, when more homeowners can access the dream of home ownership, you create more competition in the system, and that drives down costs. This is an essential part of our agenda to whip inflation. So in conclusion, look, guys, I really appreciate you all having me today to give you a little update on what's going on in Washington. Our office is always open. Appreciate the recognition of our District Director, Tatum Dale McKenzie, in our office, who works with all of you all. Our office is always open to you all to help you achieve your own American dream. And I think that we're going to push through a lot of the challenges facing our country. I still believe that this is the greatest country in the world. And one thing in these divided times that can unite all of us is this idea that in America, anything is possible. And if you work hard and if you take a risk, you can be rewarded. This is what I tell my teenage daughter, you know, when she doesn't start in the volleyball game and she, you know, she's upset about that. I'm like, perseverance, good attitude. That is the key, and that is what this country is all about, because you will succeed if you just stay persistent and keep a good attitude, and I certainly do. There's some grumpy people right now, and there's some cheerful people. I'm glad to be with all the cheerful people. Thank you very much.
We had put together a whole series of questions, of which you tackled and touched on just about every one, but a couple things did want to raise. Can you share more about what may happen with the congressional project funding? That has helped us with a lot of our projects here, and we're trying to figure out in 2026 if that's something we can expect to have available. And you might want to touch on what that is.
Yeah, sure.
Answer.
So they used to call these things earmarks, and they got a bad name because earmarks in previous decades were abused. There was a lot of waste, fraud, and abuse. There was bridges to nowhere. There was no parameters. There was corruption. Bad deal. I obviously opposed that and continue to oppose that. A few years ago, one of the challenges that members of Congress were facing was that because we had lost control of the power of the purse, and we had delegated all of our appropriations decision-making really to the executive branch agencies, unelected, unaccountable bureaucrats, administrators in the executive branch agencies, we really lost the power of the purse, our Article I power. And it was really tiresome to many members of Congress, me included, when we would appropriate something to, say, HUD, or we would appropriate a sum to the Economic Development Administration, or we would appropriate to the Transportation Department, and then we would beg the Transportation Department for a grant for Lexington, or HUD for some affordable housing funds, or if Lexington wanted to continue to work on their economic development industrial park, we would just have to go and beg them for consideration. This process that make sure it has parameters, make sure there's disclosure, transparency, but that restores the power of the purse to your elected representative of Congress is a much better system. It doesn't increase spending, it stays within the amount that we appropriate, but it actually subtracts spending that is in the hands of the agencies to, on a discretionary basis, dole it out to whoever they want. Representatives, Republicans and Democrats around the country know their constituencies best, and so this has given me an opportunity to work with your mayor, to work with your city council members, to work with the county judges on water infrastructure projects, road projects, bridge projects, economic development projects that provide infrastructure that really deliver a return on investment, creating jobs. Those are the hard infrastructure projects that we have supported, broadband projects. And it's not more spending, it's actually reducing spending in the hands of the executive branch agencies, but it's allowing me to serve you all better. So as you know, we passed in the House this year 70% of our appropriations bills. The Senate passed 0. And so we couldn't do a normal appropriations process because the Senate never sent us anything back. So we ended up passing a continuing resolution with a few anomalies for national security, shipbuilding, submarines, some things like that. What that means when you have a CR is none of the congressional projects that are direct appropriations can go through. So we have some pending. Those will kick to fiscal year 2026 when we get back to an orderly process. I'm looking at Eric Frankel right now. I got one in mind, and that's moving the air traffic control tower out there at LEX. We are outgrowing LEX, and for economic development, you can criticize me for spending. That is worth the investment. We need to get a bigger terminal. We can't do that and for safety as well until we get a new air traffic control tower and move that across. I've already talked to Secretary Duffy about this. We had no success with the previous FAA. I'm hopeful we can get that done, but we need to be able to do some direct appropriations and not just leave it up to us begging FAA for them to decide whether Lexington is deserving or not. So that's coming back in fiscal year 2026. Sure.
So we have a giant here in this room in our economy, and it's called the University of Kentucky. And they have been the beneficiary of a lot of federal research funding. And so can you help us to understand what you see may be happening in 2026 and beyond?
Yeah, of course. We've talked to President Capilouto and his team, and Mark Birdwhistle, I see over here, and the whole team, Eric King. One of the things that we're looking at, and again, the DOGE project is creating a lot of questions, and Elon Musk told me personally, face to face, in a meeting I had with him, the goal is not, and including these RIFs with these probationary employees, their recommendations have not been, in many cases, just to completely wipe out or have a huge across-the-board RIF. It's about, in many cases, it's just a pulse check. The 5 things that the employees were supposed to write out, what he said was, we're just trying to find out if there's actually a human being behind those numbers. And in many cases, there's not. And so they're saving a lot of money just with a pulse check. They are not calling for across-the-board reductions, as some have said in the media. They're asking for the incompetent problems, the non-existent employees, superfluous, non-productive parts of government to be taken away, and the productive part stay. So based on his own assurances to me, I think we can make a very strong case for example, National Institutes of Health, of that important basic research that is part of the research enterprise of the University of Kentucky that does have an ROI, and I will continue to advocate for that. And the great thing about NIH funding for UK and other research institutions around the country, this is a real bipartisan issue. And so don't worry about DOGE with respect to these meritorious investments. We're gonna continue to fund those. There is bipartisan support for those, and we'll work through the challenges. It is important for us to reduce our budget outlays on non-productive interest payments on the national debt so that we can free up the fiscal space to invest more in the University of Kentucky. The tragedy of our national debt situation right now is it's crowding out our capacity to make those productive investments, whether it's in a new air traffic control tower at LAX or the National Institutes of Health at the Markey Cancer Center or at Sanders Brown Center on Aging. Getting our budget deficit under control gives us the ability to prioritize, and I feel very, very excited about that. Great, thank you.
Thank you very much. Hey, can I say one thing before we give this guy a round of applause? Is Eric Frankel, you have been one of the most significant leaders in this region, in our Commonwealth, and you're one of those guys that probably doesn't get called out for the vision you've had. That airport is our airport's going to change rapidly and immensely, and it's because of the leadership of you and your team. And I just want to acknowledge you and say thank you for everything you've done. And you did a great job of doing that, but I also want to say thank you very much for being very much available whenever we need you. You never dodge the issues. You work directly with us. And so with that, let's give our Congressman a round of applause.
Oh, sure, yeah.